Good morning, our esteemed investors. It's always a pleasure to have you join us on this call. I am Linda Ebodagi, and I'll be taking us through the equities market review. So our session outlines the points to reviewing the market, and recommendation for the week, our expectation for the week, the outlook for the week generally. So looking at the graph, we could see that both the ASI and the NGX30 showed a consistent upward trend throughout the week, indicating positive market sentiment and broad-based gain in the equity prices. On Monday, both indices recorded slight gains compared to the previous week Friday, suggesting a strong start to the week. From Tuesday to Thursday, the market showed stability with minimal fluctuations. By Friday, both indices rose further, making the highest point of the week, showing sustained investors' confidence and buying interest. The ASI gradual rise suggests steady gains across most sectors, though slightly moderated compared to the NGX30. Looking at the distribution of volume traded across the sector for the week under review, the market activity remained heavily concentrated on the financial service sector, underscoring its central role in driving trading volume in the exchange. The ICT and the service sectors showed moderate participation, while other sectors collectively contributed to the market breadth. Overall, the weak trading pattern reflects sustained investors' confidence in financial equities with selective interest in other key segments of the market. During the review week, investors traded a total of 2.42 billion shares, valued at 76.6 billion, compared to 2.29 billion shares worth 90.28 billion in the previous week. This represents a 5.7% increase in volume, but a 15.1% decline in value, suggesting heightened trading activities in lower price stocks. The financial service sector maintained its dominance on the activity chart, accounting for 1.66 billion shares, valued at 32.57 billion, representing a total of 68.65% of the total equity volume and 42.50% of the total value traded. This performance underscored the sector's continued leadership in market liquidity and investors' participation. The ICT industry followed with 184.88 million shares valued at 8.66 billion, reflecting strong investors' interest in technology and communications related stock. The service industry ranked third, recording a turnover of 154.54 million shares valued at 1 billion, indicating moderate activity during the week. Trading in the top three equities were Cornhall, Fidelity, and Access PLC, accounting for 618.55 million shares valued at 9.22 billion, contributing a total of 25.54% and 12.03% to the total equity volume and value, respectively. The all-share index and market capitalization appreciated by 1.35% and 1.36%, respectively. Sectorial performance under the lead capital coverage, 4 out of the 5 indices closed in the positive terrain, where the NGX consumer gained 1.93%, insurance gained 2.26%, industrial gained 2.79%, and the oil and gas 0.04%. This presentation would be incomplete if we don't point you to the direction you should be looking at for the remaining part of this week. We have carefully curated a list cutting across all the sectors being covered by the lead capital group. So under these top stock picks, we could see that the banking, the insurance, the industrial, the agricultural, the health sector, the oil and gas, the conglomerates is fully represented. The next slide points to our general weekly recommendation, where number 1 to number 28 represent the buy recommendation, and from 29 to 31 represent the hold recommendation, while 32 to 36 remain on the sell recommendation list. However, this is just an extract from the general recommendation list that have been sent out earlier this morning. It's currently in your inboxes. This is just an extract for the purpose of this presentation. So looking at the expectation for the remaining parts of the week, beginning today, last week, the Nigeria stock market ended in the positive territory for the 6th consecutive week, with the all-share index and market capitalization testing new highs. As the market continued to wait for the Q3 2025 results for corporate actions, Legend Internet PLC and Okumu Oil announced its results, which was in line with the market expectation. We expect results to start coming out in this new week, and that will give our investors the opportunity to reposition in anticipation of what the market holds for them. Also, we expect some measure of profit taking by investors to take place this week, but this will be overwhelmed by buying interest driven by anticipation of good results is to hit the market. Overall investment sentiment is expected to remain bullish, as exhibited in the strong positive market breadth last week. We also predict the Nigeria all-share index to test above its current all-time high of 148,977 points, crossing its resistance points of 150 points to close between 150,500 points to 151,500 points. The remaining part of this week, we expect that the bull will equally dominate the most trading days due to the high expectation of the Q3 results that is yet to hit the market. With this, we've come to the end of the equities market review. I'll be leaving you in the hands of Mr. Samuel Oladipo to take us through the fund market space.
Good morning, esteemed investors, and thank you so much for the robust review, Lina. Very quickly, we'll take a look at what transpired the fixed income space of the market. I'm very certain that for those who have consistently joined us on this call, they can testify to the fact that we have clamored several times or repeatedly about the need to position at the current rate levels we have in the markets. And I think the activities that we saw last week further solidifies our call. As during the week, we saw some key data released into the market, one of which is the inflation data for the month of September, where we saw inflation rates declining by roughly over almost 200 basis points from 20.2% to low 18 levels. What that would naturally signify or point to in the market is that, one, we would see some realignment or some readjustments across the entire market, beginning from the monetary policy rates. By the time the Monetary Policy Committee meets next month, we should expect a significant review of the monetary policy rates. Let's refresh our mind to that should be early 2024. I think February to be precise, when the Cardoso-led Monetary Policy Committee met for the first time, where they increased the monetary policy rates by 400 basis points from 18.5 to 22.5. You know, that signaled the beginning of the increase in rates by the committee. Not until about 2 months ago, or 3 months ago, when they began slowing down. So where inflation currently is, what we are quite certain of, or what the market should expect, is that we would see a reduction in the monetary policy rates by the next Monetary Policy Committee. All of these things, it actually speaks to something, right? And we expect that for every rational investor, for every forward-thinking investor, we should not wait until when these actions are metamorphosized, where they play out in the market before we then start to position. The reason we're here is to guide you on what we should be doing ahead. As an investor, we expect that you should be forward thinking, and that's why that's why we gather every morning, to review what to expect in the market and activities in the market. And so our discussion this morning will be centered around positioning ahead of some of these key events that we expect in the market, and how you as an investor you can make the best out of your investment. But before that, let's quickly look at what transpired in the money market space, where we saw the funding rates did I say marginally increasing, because we didn't see significant movement. But notwithstanding, we saw the open repo rates increased by 4 basis points, while the overnight rates increased by 10 basis points, closed at 24.54 and 25.07% respectively. And that was due to the slight decline we saw in liquidity levels. I think the previous week liquidity closed roughly well above 2 trillion naira, but for last week we saw a decline to around 1.6 trillion naira, and that was because we had some settlement obligations during the week that was. So that led to a little strain on the funding rates. But notwithstanding, the level still remains great. We expect that for this week, the levels should still hold, because we expect some inflows into the market that, despite the settlement obligations, we still expect to flow out from the system. But looking at the Treasury bills market, the bullish run still remained, and that wasn't surprising. For every investor at this point, I think that the right thing we should be doing is to position ahead of the markets. We don't wait for events to unfold before we then start to, okay, what should we do or what should I do? And that also explains what we've seen in the equities market, the bullish run. People are buying ahead of key events. They know that by the time the monetary policy rates is being reduced, that would translate to that would translate to lower cost of borrowing for companies, which in turn would also lead to better performance and better return. So you see everything going on in the markets right now. For every forward-thinking investor, you can plan your investment, you can plan your wealth with the right guidance. So that wasn't surprising that we saw the Treasury bills market also closing on a bullish note, as we saw some activities around the long end, particularly where buying interest dominated. But just very marginal, because most of the activities last week were skewed more towards the bond market, where we saw some positionings, particularly at the long end. But at the end of the week, average yields declined by 2 basis points to close at 17.39%. Then this week there's a Treasury bills auction taking place later on Wednesday, where 650 billion worth of Nigerian Treasury bills will be offered by the CBN. But looking at where the previous auction closed, the 91-day, we saw the stop rate closing at 15%, the 182-day stop rate at 15.25, and then the 364-day closing at 15.77. Mind you, this auction took place when we still had inflation rates above 20%. So now the inflation is below 20 at the 18 levels, and with the expectation that at the next monetary policy meeting, we should expect a rate cut. That points to the fact that the next auction would clearly or should print lower than where we saw the last one. But that would also be dependent on liquidity levels in the system by the time the auction is taking place. But all of this, the ultimate goal of all of the, for all of this rather, is that as an investor, you should be planning ahead at this point. We've always emphasized that the current rate levels in the market are still very, very attractive. Looking at where we were coming from, I think sometimes that should be like a month ago, we projected the movement in the rates beginning from late 2023 or early 2024, where rates were around 9, 10, 11%. Then we went as high as 23%. Now we're back to around 15%. So considering where we were coming from, I think there is still room for further decline in rates. which speaks to the fact that we should still take advantage of the current levels that we have available in the market. And looking at the bonds market as well, we saw weaker activities across this market, but the market at the end of the week closed on a bullish note because of some buying interest we saw at the long end of the curve. But looking at the short end, rates increased slightly by 2 basis points, while at the mid to the long end of the curve, we saw a 2 basis point decline at the end of the week. In terms of maturity, that we saw activities pass through last week, the 2026, the 2027, the 2028, 32, 34, 35s. But predominantly, most of the activities last week were on the 2049 bonds, where we had some major buyers on that end. But at the end of the week, average benchmark yields declined by 1 basis point, it closed at 15.97%. Then I want us to pay attention to this yield curve. I know we've always included this in our presentation, but I noticed we don't speak to that. Look at the gray line. The gray line where we have what we have on top, that speaks to the yield levels at the beginning of this year. We can see 31st of December 2024. That was the levels where yields were. We can see them as high as particularly on the short term, we saw yields hovering around 20-21%. But currently, see where we had today. The blue line, that's where the yield closed for last week. And then the previous week, that should be orange, I think, line. That tells us the fact that yields are consistently coming down. For any investor who has positioned when yields were as high as 20-21%, you are clearly in significant returns now that we have yields at the level that they are now. So all of this just point us to the fact that it is never too late for you as an investor to position. Imagine if you had positioned last week where the orange line speaks to, and then currently at the end of the previous week rather, and at the end of last week where yields level have declined to the blue corridor. It means that no matter how little your returns are, you're not just waiting on investments returns alone, but also you can see the movement in the yields level can also give you an opportunity to make money in the market. All of these are products we have in-house. We've curated all these dynamics into it such that week in, week out, investors get to earn significant return on their investment. But before we touch on our various product offering, also a quick look at the foreign exchange market. The Naira declined by about 15 basis points at the official window to close at 1,417 Naira 60 kobo. I think this is the second consecutive week that Naira is depreciating. But like we've always maintained, the volatility in this space of the market is expected to continue in the short term, and we'll continue to give updates on happenings in that at that space. But it's also a call. If you have FX and you're also looking to invest, it is very advisable that while you maintain investment in Naira, you get to diversify your portfolio in dollar-denominated assets, because you can get to hedge against all these fluctuations and potential depreciation in the currency. Then looking quickly at our various product offerings, and all we've analyzed this morning would be of no use or of no importance if we don't show you as our investors, clients, where you should be putting your money in. The fixed income fund, it's a very good product that has been well curated to adjust to market dynamics and also deliver reasonable returns in the fixed income space. Looking at all that has happened in the market and what we expect to happen in the coming months, it is only wise that we start to position ahead. There's a popular mantra in the investment space. The best time to start an investment was yesterday, but the next best time to begin is actually today. I know people who have invested beginning of the year or long before now. I'm sure they're reaping the reward. But for those who are still contemplating, as you're positioning in the equities market for the year end, I think that the opportunity still remain abundant in the fixed income space as well. So our fixed income fund is a mutual fund that pays dividend twice a year. It has a holding period of 90 days, and the yield level is significantly above 18%, which means that the return expectation is well competitive when you compare it to the average return on the market. For the lead balance fund, this fund has a mix of both equities instrument and the fixed income instrument. As we've pointed to you this morning, the equities market has been on a bullish run, and likewise the fixed income market. Both markets are running concurrently, which means that this fund also gives you a very good avenue, a very good opportunity to put your money to work, or to put your money at work. And I think the current year-to-date return on that is inching close to 50%, which means if you've invested in this fund since the beginning of the year, as of now, the return you've made, or the return you potentially have, is almost 50% of your assets. So why not consolidate on that? And for the lead dollar fund, as the dollar-based fund, also a mutual fund that pays dividend once a year, and it allows you to put your FX to work without necessarily converting to Naira, and also protect you against any potential depreciation of the Naira. Then lastly, we have the Gazelle portfolio, which is fixed deposit products. We've spoken to the fact that rates would continue to decline, at least for the foreseeable future. So why not lock in your investment, lock in your funds for as long as you can get them at very competitive rates? We are very, very confident that the rates we offer in-house is competitive when compared to what you would naturally or you would get from your regular commercial banks. And our lines are open, our customer care emails are there. You can always reach out to us for inquiries on the rate levels. And possibly, I know last week we had some engagement with some group of investors, and they were asking us, since we know that rates are going to decline in the coming future, can we give them more like what they call special? I think they're trying to use special offer since we're heading towards the end of the year. We're looking into that. And if we see a very decent opportunity to give investors significant returns, I would always come back to you. But I think you should watch out on that for a special offer that would allow you to lock in your investment at least for the next 1 year, without having to worry about what's going on in the market going forward. And with this, we've come to the end of the presentation this morning. If you have questions, you can bring them to the forefront now. You can use the chat box to send me your questions, or as an alternative, you can signify by raise of hand, and you would unmute your mic to ask your questions. Thank you very much. Time for questions. Time for questions. Okay, I can see someone's hand is up. Okay, just a moment. We're trying to give you the permission to. Okay, I would like you to share, I guess, our recommendation for the week. That has already been sent to your email, and I think it was sent out this morning. You can check through your email for the list of recommendations. And then this morning's report will also be sent out. You can take a look at those stock picks we've identified across the various sectors for your investment decision. You can now speak, sir. We've unmuted your mic, Mr. Kennedy.
Okay. Good morning.
Good morning, sir.
Thank you for the good morning thank you for the wonderful presentation. I know you said rates are likely to tend downwards, but I want to kindly just give us like a ballpark rate. So like what are your expectations about the next Treasury bills auction? That's what I want to find out. Thank you.
Oh, okay. All right. Thank you so much for
the
the
ballpark
question.
figure, please.
Okay, okay, all right. So, you know, the market is dependent on certain factors. And I think one of the major ones would be the liquidity level in the system. As of this morning, I haven't checked where liquidity opened, but looking at where it closed on Friday, liquidity closed well above a trillion naira, about 1.6 trillion. And then I know we have some pending settlement obligations that should go out from the system today. I think about 2.2 trillion. The OMO auction settlement. So when we net that out, we expect potentially I would naturally expect liquidity to open on a negative note, but we might have some inflows that would have also hit the system. So the rate levels would depend on the liquidity level in the system, which would naturally inform demand level as well as the supply level. If the system is still very reasonably liquid by Wednesday, we should expect significant demand, and which means that we would see a decline in the stop rates. But taking a conservative position, I would naturally expect a 30 to a 50 basis point decline from the current levels at the next auction. But like I said, that will be dependent on liquidity position on the day of the auction. Uh, okay. Well, good morning. Nice mail, and I haven't gotten a response. Okay, Mr. Lawa Abiola, this is noted, sir. We would look into your complaint, and a staff member will reach out to you this morning, sir. Mr. Lawa Abiola, apologies for the issues you're currently encountering. We'll reach out to you after this meeting. Please, will you send us a copy of this presentation? You stop doing it. Well, we've always sent it out every week. We send out the report. I think maybe probably there's something wrong with the communication channel. But Mr. Saad Adebayo would okay, I personally send it to your email. I know I have your email. I personally send it out, but we always send it out. Uh, Mr. Joseph Ake, no one has reached out to me as regards my complaint. If promised someone will reach out to you. Mr. Joseph Ake, apologies for that. I know that a member made an attempt to contact you last week, but I can't confirm what the error was. But in addition to Mr. Sahad Adebayo, I've also taken note of your name. I will personally reach out to you today, sir, so that we can resolve some of your pending issues. Good morning, lead team. Please, what is the extent of live data accessible through your platform? Is it possible to see market levels in the market? Live levels in the yes, please. The market is live. So our platform is live. Once the market opens, you can get to see the live data as the market is trading. But note that market has to be open whenever you're trying to get live data in the market. So yes, the market is live, and the latency is also very, very strong. Thank you for your insightful presentation. What are your expectations in Q3 results? In terms of Q3 results, okay, thank you. We expect a better performance in the Q3 because especially across the major sectors we have in our markets, the key drivers like inflation is moderating. So we are also expecting that to reflect in the performance of the results that are likely to win the market in the couple of weeks to come. So the good thing is that we're also encouraging investors to start taking advantage of the current market price, as we have seen Okomo results hit the market on Friday, and they also they were able to double their turnover, and they were able to they also grew their profit after tax. So they also declaring 10 naira interim dividends. I think they also did that. By the time they also declared their 6 month or half-year result. So they will continue to leverage on the stability in the market in this variable. So take advantage of the current market price. So we're expecting good results to start with the markets from the stability we have seen within the key macroeconomic indicators. Thank you. What is the update on Fidelity Public offer? Thanks for
The offer, the stock, it has been credited to various investors' account. But if you're having issue with your own, and then you can kindly indicate, because we got complaint from some of our clients that their own accounts have not been credited, and then we actually reach out to the first registrar. We have reconciled, and they want to believe that most of those complaints have been addressed. But if you haven't gotten yours, please kindly send us an email so that I can also take it up and ensure that we liaise with the first registrar and ensure that your account is also being credited. Thank you.
Okay, thank you everyone for joining the call this morning. We really do appreciate your time. And with this, we've come to the end of the session. I'm wishing you a productive trading week. Enjoy the rest of your day. Thank you.